Hello everybody. I want to use this video to show you why I think the tide is turning as far as how Australians are going to be investing money in the future. Starting from 2020, I think here I have an example of a woman at work I was talking to. I'm very close with her and her husband, and she was always kind of against or really not getting what I was saying as I used to kind of try and explain things, the same way I do on this channel. She kind of didn't appreciate it, so I had since stopped talking to people about anything, what's best for them to eat or not to eat, what to do with their money or whatever. I might do it on this channel, but that will attract people of who are interested in these things instead of just annoying the hell out of everyone on social media. So I haven't done it for like probably 3 years now, but I know in the past that they're like, oh yeah, we know what your thoughts on that are, so that's okay, thanks for sharing. And I'm like, okay, I'm not going to share anymore. But so she says to me, where do I put my money? She says she started to realize, which is what I think is happening to a lot of people at the moment. Now the sample size n equals 1 is not really telling, but I have been speaking to a few people and I felt the same kind of vibe from them as far as property. Again, everything I've been saying, it's coming together as far as, you need to buy a house to live in, sure. You need it, it'll always go up. It won't go up because of that, but if you needed to start a family or continue a family or grow a family, start looking and buy it sometime, I don't know, this year. In any case, doesn't matter that it's kind of close to its peaks and it's still toppy. But fine, buy it. You'll probably pay a little bit more, but if you're going to be there for 5, 10, 20, 30 years, who cares? Will it be cheaper in a few years' time? I think so, but you just can't wait. Life can't wait, so just do it. But to be investing in it is complete lunacy, in my opinion. I mean, I think a lot more people will be seeing it, like this colleague of mine who said, it's just a lot of money. Her and her husband have good jobs, and she says, I don't have that kind of money, and I don't want to borrow a lot of money, which is what she would have to do. So she's got that money sitting on the sidelines in her bank account. She knows that it's not the best thing to keep your money in the bank account, especially now, and I agree. Again, this is not financial advice, but this is our chat. Without me initiating it, I just went over to see her. I haven't spoken to her for a little while, on the same floor in the building. And she says, what do you think? I said, well, just like yourself, there's a few people who have a little bit of money or a lot of money on the sidelines, thinking about where they want to put it, and they definitely don't feel like buying a hugely expensive and property house or a unit with all the strata fees and everything is a good thing. They see that it's not a sure way to make money. Also, from her mouth, she said, the expenses and the fees are huge, with the real estate agents and then the council rates, any repairs. She just says it's not something we want to do. So what do you think? What do you think about exchange traded funds or ETFs and that? And I think people have been investing in that. So I suppose there's nothing wrong with that. But I think that in any sort of market, if you pick stocks or get someone, subscribe to some sort of newsletter or just put some money, see how it goes, open a brokerage account, and I think people will be doing that a lot more. Whether you have 10, 20, 50 or $100,000, you'll be able to actually just put your hand in your pocket and without going to the bank and asking for a huge loan, invest what you have. And the more people do it, the more the market's going to go up. And if you think that the market's probably currently, say the stock market in Australia is not currently cheap, but it's not super expensive, and you'll hear many experts talk about this. I don't need to mention these things because as far as getting back to the level where it was years ago now, and you think, well, that's high. Yeah, but adjusted for inflation, it isn't. It's nowhere near as high. Can it go higher? Yes, absolutely. Can it pull back in the meantime before it goes higher? That's what I think, or maybe it's wishful thinking. That's what I'm hoping for and looking at, but there'll be a reason why it's pulled back. There'll be some sort of geopolitical thing, like another September 11 or something that will just spook everybody out, and then you'll have to have the guts to put your hard-earned cash into something that's tanking and still tanking, and you don't know where the bottom is. You'll never know where the bottom is. The hindsight doesn't count. You can't go back and say, oh, I should have. No, that doesn't work, never worked. But it'll be something different. It won't be a September 11, or it won't be it won't be obvious, which is why people say, well, September 11 was this, but now it's different. it'll always seem to be different, but it'll be an event or a series of events or just something that spooks the market like it always does, and it'll pull back 10-20%. Doesn't have to be anything. And that's not a crash, that's just a correction. And you need to kind of say, look, this is a good time, I'll buy some of the blue chips. I think the safest way, do not pick some small mining plays that, again, it's not financial advice, but I know I'm not going to be looking at small illiquid stocks. I want something that when liquidity dries, that you can still buy or sell it, instead of having these little, gold miners when gold is pumping or something. You're hoping that someone's going to come along and I mean, there's more risk, but there might be more chance that they go 10 times, from 5 cents to 50 cents a share, of course. But I don't think you can just play with it a little bit, maybe like a casino. But investing some serious money, just go blue chip. Think of the next thing that you think might go up, or the newsletter that you subscribe to, and just make up your own mind and just jump in. What do you got to lose? Because the property, you've lost 6% as soon as you bought it. For your privilege to get into that property investment, you need 4.5% stamp duty, and then all the fees that come with getting a loan, and then all the legals and that. I just don't see it happen, which is why a friend of mine also was saying, well, I don't think we want to go there. So, but where do we go? When the stock market starts kind of going up, maybe after a correction, and people there'll be a .com kind of bubble or euphoria, especially now, because you can not just do it on your computer from your CommSec or E-Trade account in America. You'll be able to do it from your mobile phone so much easier that you'll be tempted to do it just the way that people did the Bitcoins and all that. But except that you'll be buying into, mostly you're hoping to be buying into profitable companies that are making things, and not just some Bitcoin or other crypto that uses the blockchain, that is an open source technology that anyone can use. So you can't really make money on it. You can make money from making something out of it, some sort of system, but don't think that the big banks and the governments will not want to do something themselves instead of paying some kid that came up with a crypto implementation of something that they need. They'll just buy it for peanuts. Nothing to do with the crypto market going up or Bitcoin. So as you can probably tell, I think crypto is just one of those things that have come and gone. Will it spike and go up and down? Probably, maybe. But let's talk about serious ways that money managers, your superannuation, your pension fund managers will be looking to put money in. So where that money goes is where you want your money to also go at the right time. When is it? I couldn't give her the answer, but I just said, look, I don't try and tell people outside of my channel what I think my thoughts are, but I definitely am starting to agree with you or you starting to agree with me that we talked about this long time ago when you kind of didn't like my views on the property, that it's just a mug's game. You don't want to put your money there unless, once again, you want to live in it, have family and all that. So stay away from it. I didn't say it that way. I'm like, that makes sense. But it's telling me that the tide is turning and people are realizing that this you can't lose money on property. It may not be so true, because once again, you buy it today, you've lost 6% because of all the duties and all that. So you're hoping that it's going to come back up 6% just for you to break even. If it goes down, you're just up the creek without the pedal. But that can happen in any investment. But yeah, property is kind of almost guaranteed, maybe in this decade, to go that way, at least in 2020. But we'll find out. We've only got a little bit more than 350 or so days to find out for 2020. That's it for now. I'm going to obviously be more active, and we'll talk again many times and soon in 2020. All the best. See you later.